a plane crashes into your house. Not a metaphor, not a movie scene. An actual aircraft falls out of the sky and destroys your living room. So who pays for that? It's one of those questions nobody thinks about until it happens. And when it does happen, the answer is far more complicated and far more infuriating than you'd ever expect. Start with the good news. Your standard homeowner's insurance almost certainly covers this. Most policies include something called the aircraft peril, which is exactly what it sounds like. If a plane, helicopter, drone, or even a chunk of debris falling off an aircraft smashes into your property, your homeowner's insurance is supposed to cover the damage, and that includes the structure of your home, your personal belongings inside, and other insured structures on your property like a garage or a shed. So if a Cessna nosedives into your roof at 3 a.m, you call your insurance company, file a claim, and they pay out. But here's where it starts to get interesting. Your homeowner's insurance pays you first, then your insurance company turns around and goes after whoever caused the crash. This process is called subrogation. Basically, your insurer says, hey, we just paid our customer $200,000 because your airplane destroyed their house. Now you owe us. They have the legal right to sue the responsible party on your behalf to recover what they paid out. And if they recover the full amount, you might even get your deductible back. Sounds clean and simple, right? It's not. Because the next question is, who exactly do they go after? And that's when the whole thing turns into a legal nightmare. There are potentially 5 different parties who could be held liable when a plane crashes into your home. First, the pilot. Pilot error is the leading cause of aviation accidents, responsible for up to 80% of all crashes. If the pilot was negligent, inexperienced, or impaired, they can be held personally liable. Second, the airline or operator. If the pilot worked for a company, that company could be on the hook for improper training, poor maintenance, or scheduling errors that led to fatigue. Third, the aircraft manufacturer. If a design flaw or manufacturing defect caused the crash, the manufacturer is liable. Fourth, air traffic controllers. If miscommunication or bad instructions contributed to the accident, the FAA itself could be a defendant. And fifth, maintenance companies. If a third-party mechanic botched a repair, they're in the mix too. So there's no shortage of people to blame, but here's the real problem. Can any of them actually pay? Commercial airlines are the easy scenario. Commercial carriers are required by federal law to carry massive insurance policies, minimums of $300,000 per passenger, with total coverage requirements reaching $20 million or more per occurrence. If a commercial jet crashes into your neighborhood, there is money to be found. The airline has deep pockets, their insurance has deep pockets, and your claim will almost certainly be paid, even if it takes a while. The thing is, commercial planes almost never crash into houses. The commercial aviation accident rate has dropped to roughly 1.13 accidents per million flight sectors, and your odds of dying in a commercial plane crash are about 1 in 11 million flights. Commercial aviation is 95 times safer than driving your car. The planes that actually crash into houses? Those are almost always small, privately owned aircraft. Single-engine Cessnas, personal hobby planes. And that's where the system completely falls apart. Here's the part that genuinely shocks people. There is no federal requirement for private aircraft owners to carry liability insurance. None. Zero. The FAA regulates safety, not financial responsibility. They care about whether your plane is airworthy, whether you're a certified pilot, whether you're following airspace rules, whether you can actually pay for the damage you cause. That's not their department. And if you're thinking surely the states require it, think again. Only 11 states in the entire country have any form of financial responsibility requirement for general aviation. Minnesota is the only state that requires nearly all aircraft owners to carry minimum liability coverage, and that minimum is just $100,000 per passenger seat. $100,000. Your house is worth more than that. So what happens in the other 39 states? A pilot can legally take off in a private plane with zero liability insurance, and some of them do. Aviation attorneys have seen this over and over. There have been numerous cases where a pilot carried more liability insurance on his car than on his airplane. Some beginner pilots can only get $100,000 in total coverage. Even pilots who do carry insurance often hold a standard policy of just $1 million per accident, with a cap of $100,000 per victim. When you're talking about a destroyed home, medical bills, temporary housing, lost belongings, and emotional trauma, $1 million can evaporate fast. And if the pilot has no insurance and no personal assets, one aviation attorney put it bluntly. In cases where the pilot is totally uninsured, he advises potential clients to give up seeking compensation entirely. There's simply nothing to recover. That means in a worst-case scenario, the only money you see is what your own homeowner's insurance pays out. You eat the deductible, you deal with whatever gaps exist between your policy limits and your actual losses, and you move on. Because you can't squeeze money out of someone who doesn't have any. This isn't theoretical either. Real cases keep happening. In October 2019, John Patterson was jolted awake by an explosion in his DeKalb County, Georgia townhome. He and his dog Max fled the building, assuming a gas line had burst. What actually happened was a private airplane had crashed into his home shortly after takeoff from DeKalb Peachtree Airport. Residents were left temporarily homeless, scrambling to figure out who would cover their losses. In January 2025, a small plane crashed through the roof of a furniture manufacturing building in Fullerton, California, less than 2 minutes after takeoff. 2 people died, 18 were injured, and over 200 workers had been inside. Security footage showed the plane tilted on its side as it dove into the building and caused a fiery explosion. In May 2025, a plane crashed into a San Diego neighborhood of Navy-owned housing just before 4 in the morning. Jet fuel rolled down the streets, 15 homes caught fire, half a dozen vehicles ignited, and residents woke up to a wall of flame outside their windows. 3 people on the plane died. Miraculously, no one on the ground was killed. These aren't freak occurrences from decades past. These are from the last 6 months. And here's the timeline that really stings. Even when there is insurance, even when there is a liable party with real money, the average plane crash claim takes approximately 2 years to resolve. Aircraft crash investigations are genuinely complex. The NTSB has to investigate, causes have to be determined, multiple insurers and attorneys get involved, and during those 2 years, you're the one living in a hotel or a rental, waiting. There's one more thing worth knowing. Airplane manufacturers have a special legal shield. The General Aviation Revitalization Act of 1994 protects manufacturers of smaller aircraft from liability if the plane or part in question is more than 18 years old. So if a 40-year-old Cessna with a known design issue crashes into your kitchen, the manufacturer might be completely untouchable. So here's how it all shakes out. A plane crashes into your house. Your homeowner's insurance pays first, then tries to recover from the responsible party through subrogation. If it's a commercial airline, you'll likely be made whole. If it's a private pilot, you better hope they actually have insurance, and enough of it. If they don't, you're largely on your own. The whole process takes about 2 years. And the statistical chance of any of this happening to you sits at roughly 0.000001%. But for the people it actually happens to, those odds mean absolutely nothing. They just want to know who's paying for their house. And far too often, the answer is mostly them.